What's going on, everyone? Jake here. We are back with Roberto, the newest mentor to join WeTradeHQ. Roberto has over 12 years of experience investing in the stock market. He's a certified fund manager in Brazil, and he has his certification for the Canadian Securities course. Today, we're going to be talking about long-term investing and some strategies and overall just long-term investing. So let's get started. So Roberto, when it comes to long-term investing, I know that's kind of what you specialize in, as well as ETFs. If you were to, say, a beginner trader, someone that hasn't invested before at all, came up to you, what would you tell them on how to get started long-term investing?
Okay, so to be a good investor, it takes a long time, right?
Yes. Yep.
It takes a long time, but it doesn't mean you don't have to start. You have to start, right? You have to start. It doesn't matter if you have high knowledge or not. So over the time, when you practice that, you're gonna improve it.
Yeah.
Yeah? So don't give up, right? Don't give up. I like the perspective of the Peter Lynch. Explain about how to do a good strategy to succeed in the long-term investment. You have to explain why you are investing in a specific company. Mm-hmm. You have to understand and study. And let's say, for example, I like Apple. Why you like Apple? Because it's profitable, because it's a stable company. It doesn't matter if the economy is good or not. Yeah. The company is going well. So you can write down all the reasons.
Yep.
If over the time the reasons keeps the same, you don't have to sell the stock.
Yeah. You
don't have to sell, because the fundamentals keep on. So if something change, you have to figure it out what's happening, and then maybe it would be a good idea sell or not. It depends. If you see if the Apple is not the same company anymore, it's another competitors are doing well. Mm-hmm. So you can maybe it's a chance to sell the stock and put the profit in your pocket.
I like that saying a lot. Mm-hmm. So to summarize that answer, basically really understand what you're investing in. You know, what company, what are they about, their management, look at their profits, really understand what you're investing in. Mm-hmm. It doesn't really matter about the chart, the candlesticks. It matters about the fundamentals of the company.
Don't worry about the economy. Of course, the economy in general, it's very important. But if the company, it can be profitable when the economy is weak, it's okay. Why the in the future is going to be better? Mm-hmm. It's the cycles of the economies are part of the investments. You have to understand that it's sometimes you can not lose, but sometimes you are down 20%, 30%, but it's okay.
We'll come back up.
Yeah, exactly.
I mean, if you looked at the S&P 500 at any point in time in the past, you'd probably be up eventually. Mm-hmm. If you invested 5 years, 10 years ago, you'd be up now per se. But within a shorter time span, maybe 1 month, 2 months, 6 mm-hmm. months, you might be down because of just the regular market cycles.
Yeah.
So that makes a lot of sense. So to add on to that, for you personally, when you're looking at to invest in either a company or a stock, ETF, whatever it may be long term, what are kind of the 2 or 3 things you're looking at that helps you make that decision?
Mm-hmm. It's not an easy answer, but it depends of the company, because some companies are, how can I say, if the economy, think about the construction industry.
Yeah.
If the economy is not good, what happens? All stocks are down and maybe not profitable anymore.
Yeah.
But it's okay. But if the company has good management, you can
they'll survive.
You can how can I say, you can buy the stock when it's very low price,
Very cheap.
It's very cheap.
Yeah.
And then when the price recovers,
Yeah.
you do a big profit on it. But it's not easy. It's not easy because when the economy is not good, some companies just bankrupt. You know, you have to figure it out. What kind of investment you feel well. You know, so if you invest in some specific industries like construction, you have to be aware that is not easy. You can have a big loss. You know?
Is it much more? Do you feel like construction is much more volatile?
Yeah, exactly.
Like tech? Is tech? Would you say pretty volatile?
Technologies? Yeah.
What would you say are some safe industries? Like an example.
Normally, food companies.
Food.
Yeah, food companies. McDonald's, Coca-Cola.
So Roberto, would you say like healthcare is a very safe industry?
Yeah, it depends. This kind of industry, the investors are looking for higher returns when you compare with the average. But that's the problem. If the investor is looking for this, a lot of investors, also the price goes up
because they're putting more capital into it.
Yeah, so if you think about the intrinsic value of the company and the market cap, maybe there is a large gap between. You know, you have to be careful because this kind of company can grow up a lot, but if they don't deliver the expected return, so the price goes down.
That gap can close.
Yeah.
Gotcha.
Yeah.
And they're expecting such high returns because, I mean, everyone needs healthcare, so there's lots of demand, right?
Yeah.
And the supply, they're trying to see if that supply can match it.
And the companies these companies needs to do a lot of investments to keep growing.
Yep.
You know, that's why we can say it's riskier because you are investing money, but this money have to be a high return on investment.
Yeah, they want to see we want to be 50%, 100% return on investment. Gotcha. And that's a lot of pressure on the companies too.
Yeah, there is a lot of pressure. Yeah,
and we see that everywhere. With tech, I'm sure with IPOs, people expect to see amazing returns, and say with Uber and Lyft that haven't done so well, it can cause, especially when investors are selling all their shares, it can cause a big downturn. So I guess lastly, what are some say you're in an investment, you're in a long-term investment, you're in a stock. Do you have very specific strategies on how you manage your risk? Do you average down on your position? Do you add to it? Is there certain metrics that are yes or no, kind of sell or buy kind of things? Yeah. So first thing, the macroeconomics, it's more important for me. Okay. Yeah, instead of the specific company. Gotcha. Okay. Because if the economy it's going well, it's easier for the companies go forward. Yeah. You know what I mean? But how I invest in Brazil, I invest in US and Canada, Australia, but I don't use the same strategy for emerging markets and developing markets. And quickly, can you explain what emerging markets are? Is it like first world countries? Like is Brazil an emerging market?
It's normally it's that are countries that have a problem with political stuff and economy and everything.
So overall, just smaller countries, but they're starting to emerge.
Yeah, not exactly small, but Brazil is big, but huge. But it's emerging market. Yeah, China is emerging.
Yeah, absolutely. Yeah, and they're starting to see rapid growth. Both of those companies. Okay. So that was good. Where were we before?
Okay. Yeah. I know. Sure. Normally, if you think about developed countries, are countries that are very successful in technology stuff. Okay. Yeah, they invest a lot in research and development, and, you know. But the emerging countries normally the economy is based on commodities.
Gotcha.
Yeah, so the economy it's weak. If the commodities the price goes up, okay, it's everything's good, but the price goes down, it's terrible.
Because the issue with commodities is they're all price based. You know, if you're going to get gas for your car, you usually just go to the cheapest place. You're not going to go, oh, I prefer Shell over, you know, Petro. You just want a cheaper price. Versus something like technology, say like Apple versus Android phones. People like Apple phones because they're better. They have a better user experience, a better build quality, and it's not certainly the price.
Yeah, you can see the value of the product. You can see, you know. Yeah. Not in commodity.
One gas is not better than the other gas.
Just gas or oil and everything. Yeah.
That makes sense. Yeah. Okay. So, anyways, going back to strategies, you said most importantly it's macroeconomics. If economics are well, the company has the potential to do better. Yeah. And so you don't really look at percentage gains. You don't care about the charts. You just care about like when is your decision to either add to your position or sell? Like, what are the factors? Is it just macroeconomics, would you say? Yeah, I have a target for a price target, but it's not a fixed. It's I normally monitor the company over the time. Yep. If something, for example, I'm expecting 30% growth this year, but it comes 50%. Oh, for me it's a surprise. So I can do the valuation again. Do you want to explain about valuation? Yeah. Let's talk about valuation. Yeah. So valuation, it's techniques to understand about the intrinsic value. Basic is math. Yeah. No. So you have to calculate the cash flow of the company over the time and bring it to the present using a rate of discount for that cash flow. It's not easy, but we can do some easy metrics like price to earnings ratio. It's easier. You know? That's very popular. Yeah, it's valuation. It's a kind of specific kind of valuation, price to earnings. So I normally I do valuation of the companies to find the target price. Yep. But I can review it over the time. Depends on the so you kind of update it. Every 6 months. Depends on the company. Depends on the how is doing the economic of the country. That's really awesome. Yeah, I love that because a lot of people that I know that trade, you know, all they care about is the charts and the technicals and support resistance, you know, EMA and stuff like that. And what you're doing, I think, is, you know, I don't want to say like long-term investing is better than day trading. Personally, I think it is because you can put more money into investments and see a larger return. It just takes longer. Where day trading, you know, you could put a large amount of capital and think you're down a lot in the day, but in the long term it might work out. But I think, you know, it's just different strategies. Yeah, I think. Yeah. At the end of the day, and a lot of people are impatient, you know, and they can't wait 6 months, they can't wait 2 years for their investment to come to fruition. And I think what you're doing is you're exercising patience, and that's where you see success. You're patient enough, and you understand what you're investing in, that you know by a year or 2 years what you're going to do based on the evaluation of the companies. You know, you have that strategy, and you're not worried about the day-to-day movement. Sometimes I use a technical analysis as well. For example, if I'm interested in investing in a company, but if the technical analysis show me that the price keep going down, I just wait for trying to find the correct timing. Correct timing, buying when it's cheap. But I can do that, but it's just a short analysis for it. To figure it out the best moment. Do you ever short companies? Do you ever bet that it's going to go down in value, or no? You only go long.
No, yeah, like I said, if sometimes the company reach the target, sometimes I sell. It depends on the company. Remember, I told you about the construction industry,
Yes.
that it's not a stable.
Yeah.
It's not a stable industry. Yeah. So normally these kind of companies, I like to respect my
your targets.
My targets. Yeah.
Yeah. Whereas if it surprises you, maybe you reevaluate and you set it higher.
Yeah.
That's awesome. So that's really cool. I think you have a very, in a way, a very simple strategy. You kind of know what you're doing.
And there's no target for time, right? There's no target for example, if I calculate that some stock has potential to grow 50%,
yeah,
and the company can do this in 1 month, right? Or it can do this in 2 years.
Yep.
Right.
You don't know.
Yeah, I don't know. I can do some technical analysis, but it's not 100% sure.
No,
right?
It's not.
Yeah.
And what are your thoughts on dividends? Do you like dividend paying stocks?
Yeah, I like dividends. I have the mix of everything.
Yeah.
I have some stocks are good in dividends. Some stocks are they are growing a lot.
Yeah.
You know. Yeah, I like that. I like cool. to use different perspectives.
All right, everyone, that concludes our video for long-term investing. Thank you, Roberto, so much for your time. I really appreciate it. This was kind of more of an intro, a beginner video. So if you want to learn more about long-term investing in ETFs, be sure to check out Roberto's mentorship on WeTradeHQ, where he can go more in depth with you on how to set up those strategies. Also, be sure to check out his Instagram. Feel free to send him a DM, any questions that you have. And comment below if you want to see more content like this, or if you want to see something else. We're always open to suggestions. And yeah, once again, this is Jake here from WeTradeHQ, and have a good one.